The uncertainty with respect to the tariff situation has been with us for quite some time, and it's probably going to be with us for an extended period of time. I don't think on April 2nd, all of a sudden we'll learn something that'll change the dynamics in a meaningful way. Having said that, I think there are two aspects to tariffs. One is the uncertainty that it creates in the US economy. And if you look at any of the survey data, it clearly tells you that the level of uncertainty is probably the highest that it has been in almost 10, 15 years, with the exception of the COVID episode. And the other interesting thing is, to some extent, it is self-inflicted. That is, it is because of the policy choices that the administration is delivering on. So the uncertainty is real. Uncertainty will have an impact on U.S. growth prospects, and therefore it'll have an impact on U.S. profitability and U.S. equities in a meaningful way.
Right. Krishna, you've described the current market as a T-bill and chill environment. What specific signals are you seeing that suggest limited upside for stocks in the near term in this very elongated, uncertain environment?
So there are two aspects to that. One, in this sort of an environment where uncertainty persists, the likelihood that labor market strengthens, or for that matter, investments get going, is pretty low. This is an environment where the best case you can hope for is the labor market doesn't crack, and whatever investment plans people had ahead of the uncertainty manifesting itself, they continue with it. So in that context, that puts a meaningful pressure on outlook for growth and profitability growth in particular. So that I think at the end of the day, it's really that matters more for U.S. equity markets, given that the valuations are were pretty stretched when we came into the year and rallied all the way up to 6,200 level for the S&P.
Right. So with potential retaliatory tariffs from trading partners like Canada and Mexico also looming, how might this affect investor confidence in U.S. large cap stocks and the tech names, for instance? Would you recommend shifting towards more defensive sectors like utilities or healthcare?
The issue with the U.S. large caps is their valuations were pretty high to begin with. So in that environment, any bit of uncertainty really puts a damper on things. That is, they weren't cheap. If they were cheap, one could make a case that, well, the bottom is near. We certainly cannot say that with a great deal of confidence. That said, I think the issue with large caps isn't profitability just yet. Issue with large caps is valuations and uncertainty rather than profitability. There will be an issue with profitability, but that probably doesn't come about till the second half of the year at its earliest. So the trick with large caps is, if you're going to buy the dip, if that's what you are inclined to, just remember two things. One, they aren't very cheap to begin with, and two, if the market rallies back, the likelihood of policy innovation or policy experimentation actually goes up. So that increases your uncertainty more rather than reducing your uncertainty. What we need is uncertainty to go down, and that's probably not happening anytime soon. There will be a time to buy this market because U.S. profitability is still pretty good, but it's not at 5,600 in my judgment.